All right, what's up, guys? Anthony here, Special Analysis. Welcome to the video. We are talking about the best trade setup today that I did not take. Now, some of you would get very wishy-washy after experiencing this, and you would probably be very quick to adjust your trade plan because you missed out on one opportunity. And I'm here to tell you that that would be wrong, okay? We spend successful, consistent, disciplined, profitable traders, when I say we, spend years developing a skill set, a plan, a complete trade plan, a complete trade management guideline, a checklist, all those things that are musts to be met in order to consider placing a trade. Okay? The absolute best trade setup across the four markets that we look at today, or in the daily live trade room that we looked at earlier today, light sweet crude, NASDAQ, S&P, and gold. We all look at futures. I only trade futures for a variety of reasons. I'll get into that in another video. But the reason I absolutely positively was waiting for this trade setup to transpire and I didn't take it is because my trade plan told me not to. Okay? So, market was trending here to the downside. So, let's just kind of look at it, right? Absolute bag of dog poop up here from like 4 o'clock till about 8 o'clock, even till about 9 o'clock. Really super choppy price action. Me, I wait for a trend to develop. Okay? I'm not a pullback trader. I'm not a value trader. I am a momentum trader. By employing a very, very specific plan, by locating a low risk, high probability area, I am able to consistently find opportunities that are over time profitable. I'm not going to sit here and lie to you and tell you that every trade works because I would be deceiving you. Every trade doesn't work. Every trade's not designed to work. That's not what trading is. But when something doesn't go my way, I don't go back to my trade plan, scratch out my rule, and change it. Because I know statistically, over time, I put that rule in place for a very, very valuable reason. Now, I avoid the markets, all of them, plurally, upon news releases. Anything that's an economic news release that could cause uncertainty or an extreme amount of volatility in a short period of time, I avoid them. If I feel like I can get into a trade before them, have my stop at break even, ride through the news release, fine. But if I don't believe that I'm going to get my stop to, that I'm going to already take profit and get my stop to break even or better, that I will just avoid taking the trade. So here it is, okay? We got a really clean, nice, defined downtrend. You can see we break a prior low here, break below it, retest it, test the VWAPs. Price action starts falling. We're making consecutive lower highs, consecutive lower lows. That is the definition of a downtrend. Now, of course, we're looking at multiple time frames and a whole bunch of other factors, but I'm trying to keep the video simple here to knock it over your head because we're really just focused in on why I didn't take this trade. That's the point of this video. Market sets up just how I like it to do. The first thing I define in a downtrend, resistance, right here. See that line? That's my resistance line. If price violates this line and closes above it at any point in time, trade's over. Or the setup's dead. Start from scratch. Period. Okay? That's a hard rule. Nothing gets around that. Now I'm looking for consolidation or a correction. In this instance, I got a beautiful correction. I mean, this is everything I want to see. This is like the money shot right here. Okay? This to me is, hey, let's go, baby. It is time to get it on. I'm loading the boat here because I'm checking my entire checklist. My entire trade plan is ready to go. I mean, I may consider throwing 10 contracts at this thing. I'm talking about heavy money. Heavy money. Because I genuinely believe that there's a better than not chance that this market is going to sell off into some respective forms of support. First would be 72 round, as it plays a psychological role, 71.75, which is a daily pivot, and then somewhere into the approach of $71. So we're talking about a 100+ tick move here with a handful of targets on the way down. Okay? This is it for me. Like, nothing gets better than this. This is like a wet dream come true. Like, I only need one of these a week, and I am a very wealthy man. But this is a holiday week. The markets were closed on Monday for New Year's. Light sweet crude oil, which is the market we're looking at, normally has its inventory report on Wednesdays, 10:30 a.m. Eastern Standard Time. But when we have a holiday on Monday, it gets pushed to Thursday, which is today, at 11 a.m. Eastern Standard Time. Now, the market can do one of two things when that inventory report comes out. It could take a huge whip up and down. It could reverse, or it could do exactly what I expected it to do. But I know that at 11 a.m., 9 minutes after this flawless setup, I mean, I was in love with this. Took every fiber of my being, even though I genuinely believed the market was going to do what I anticipated it to do, to not take this trade. Because 9 minutes later, we were getting an inventory report. In fact, that inventory report came out bullish. Yet the market still did what I anticipated it to do. Guys, this entire thought process I'm sharing with you right now transpired in real time in my live trade room that I host every single morning. I told my traders, this is it for me. Like, it doesn't get better. Come to Big Daddy. This is what I want. Tested the fast moving average. I mean, held beautifully. Held my resistance line flawless. I mean, it doesn't get better, guys. This setup is, I don't believe in a holy grail, but if I had to put the holy grail on it, like, this is it for me. I will only trade this setup. Don't get me wrong, it will look different every time. And it takes years of practice to identify how it's going to look different in each occurrence. But when it happens, more often than not, I can at least get to a place where I can start taking profit. Guys, in this instance, it ate up a handful of targets. This literally would have paid all my monthly bills. One trade from 10:51 into 11:30. 40 minutes would have paid covered every expense that I'll incur for the month of January. But my trade plan told me that if I don't feel as though I'm going to get to profit taking before the news release comes, not to trade. Guess what? As we approach the news release, what happened? I mean, this is just a big area of consolidation. Because normally when this setup transpires, it breaks and it just would absolutely tumble, or inversely, it would break and absolutely rally. But guess what the market was anticipating? The news release. And my very specific rule within my trade plan is not to trade the news release. Guys, it is what it is. The news release is much like the opening bell. It can make or break an existing position. News releases sometimes can be so violent that they will actually gap or jump over your stop, and your stop market order will get filled at wherever your broker fills it or the clearinghouse fills it. It can be a very uncomfortable experience. I've learned that from experience. So I have a hard rule. No trading into news releases. Am I bitter? No. Am I upset? No. Am I going to live to trade another day? Yeah. Because I'm a disciplined trader. Guys, if that is something that you are lacking, you may want to consider working with somebody, whether it's myself or somebody else, to help you start mastering that discipline and consistency. I'll see you in the next video. God bless.